Yutaka Uda is the portfolio manager for the Sturdza Nippon Growth Fund. He joins us today to discuss the case for Japanese equity. Uda-san, welcome back to Geneva. Uda-san, you have observed capacity constraints, production capacity constraints. You have also observed labor shortages. Can you tell us what the figures really say?
Interestingly, recently, the labor shortage is getting serious. As you saw this chart, the employment condition in DI came down to -18. More minus is more shortage.
Yes.
It's the lowest in the past 25 years. And also, capacity constraint is now emerging. Now Japan, the Japanese industries are changed quite dramatically. Up until a couple of years ago, everybody was talking about Japan has a huge excess of labors and the capacities and the debt. Three huge excess of labors, the capacity and the debt has totally reversed. Now we are seeing huge shortage of labor like this. This will give a quite different landscape of the economy for the coming 4 to 5 years. And then companies have lots of cash in their hands, and they are requested to improve the productivities, and then they are trying to seek high quality of labors like this, and also making every effort to employ more quality of equipment, and that should contribute to the economic expansion for the coming 4 years. I strongly believe for the coming 4 years, Japanese economy will be able to grow more than 2% or possibly 2.5%. As many other economists or market participants still think Japanese potential growth is only 0.5 or 1%. I have a strong objection with this idea. Japan have a big potential to grow, not so as the 1980s, but potential growth is much higher than the people thought. And the leading engine should be capital expenditure.
Which is clearly missing at the moment.
Missing, yes.
The growth in wages is also good for consumption, for domestic consumption. Yeah. That is also a driver.
Yes, deflecting the labor shortage, the wage cost is now coming up. For instance, recently the part-time workers' wage increased by 3.7 or nearly 4%. Then this year's spending wage negotiation in April was settled with 2.5% increase. That is the highest since '98, which will start to contribute to the consumption expansion for the coming few years or so.
The other thing that is really quite striking, and we'll see it in this graph, is that the unit labor cost in manufacturing has decreased in such a way that it's now competitive with China.
Yeah.
And as a result of this, we start seeing reshoring of Japanese industry coming back to Japan.
Yeah. As you can see this chart, Japan's wage in relation to productivity has come down a lot. Actually, wage itself has come down in the past 20 years. And then the recent weakness of the yen and also contribute to these numbers. Now, finally, we saw the result that Chinese wages in relation to productivity became higher than Japan. Right?
Yeah, that's
Therefore,
really
many of domestic manufacturers started to think about they should bring back the production facility from overseas to domestic market, and also some of the overseas companies are trying to set up their production facilities or research center in Tokyo. That is a new move, and inward investment is now increasing. That is also help the economic expansion in Japan.
There's the case of Apple, I believe, near Tokyo.
Yeah, Apple recently announced they bought a big land near Tokyo and to set up a new research center. I think in future they will make some factory as well. That is one example. And other automobile parts makers are reported on the paper. They are increasing or starting research center near Tokyo, because they think Tokyo's skill or Japanese automobile maker's skill is very high, and the high skill or high quality of products are retained in Tokyo. That's what they judge. It's better to have some factory research center in Tokyo than by utilizing this factory or research center to bring this technology into overseas like China or other Asian countries. Anyway, important point is not only Japanese companies are bringing back the factory into Japan, but also foreign companies are starting to increase the existence in Japan.
The other sector that is extraordinarily dynamic is tourism.
Yeah.
That was a bit, I mean, I know that when the government set the 30 million tourist target for, was it 2030, there was a little bit of disbelief. But the trend shows that the number of tourists is actually growing faster than was anticipated.
Yes. As you can see on this chart, last year we got international visitors to Japan, 13 million. That is more than double of 2011. And the government a couple of years ago made a target of international visitors to come to Japan, become 20 million in 2020 and 30 million in 2030. But judging from the recent trend, for instance, Russia's 30.4 million, this is a 29% up year-on-year basis. This year, so far, from January to April, international visitors came to Japan more than 40%, nearly 44%. And then I think this year, 2015, total number of international visitors will go up to 17 million. And then maybe 2020, that when the Tokyo Olympic game is held, total number of international visitors to Japan could amount to 25 million, much higher than the government expect. And that would a very big positive factor for the economy. This tourism will stimulate consumption, obviously, and also stimulate the investment.
Yeah,
because maybe if these numbers is actually achieved, maybe we need additional 1,000, 2,000 hotels. It's a huge amount.
It's a huge amount.
Very big investment.
So construction is also going well. I mean,
Yeah.
we're not going to look into the detail of everything, but construction is also going strongly. Orders for machinery are going strongly. The general context for economic context in Japan is good, and that is good for Japanese equity.
Yes.
So can you tell us a little bit about the equity
Now,
world?
judging from the potential growth for the coming 4 years, as mentioned, maybe 2.5%, the current market is extremely cheap in valuation. And now you can look at this one. This is the relation between EPS with the topics. Currently, topics is 1,600 or something, but 10% lower than the previous peak in 2007 at almost 1,800. But you can look at the profit already exceeded the previous peak. And this strong trend of profit growth will continue until this chart is only say until 16, but in my view, maybe peak of the economy could be seen 2018. Profit would continue to expand to 2018, and then maybe if this strong trend of profit continue, I wouldn't be surprised to see topics will go up to 2,400. That is nearly 50% higher from this level. The not so bubble price for 2,400 topics is based on roughly 15 times of PR. 15 times is
yeah, it's a very reasonable number.
Reasonable level, yeah, number.
And amongst shares, one sector that you have been looking particularly carefully at is banking.
Yes.
And banking is definitely giving very good results.
Yes. I think we are most positive on banking sector. One is anyway, valuation is very cheap. The PER, PBRs is roughly half of the market average. market average PRs are 15, 6 times, banks 10 times or 8 times like this PBR as well. And also, banks have a very big growth potential for the coming 3 to 4 years. Firstly, they are expanding a business in overseas. Their lending in overseas is growing 25-30% year-on-year basis. This trend may continue as European banks are requested to slim down their asset. They are withdrawing assets from overseas, particularly the emerging economies, where Japanese banks are entering. And then the volume growth is, as I said, 25-30%, and also profitability in overseas business is much higher than domestic. And on top of that, domestic business is now coming back in positive growth. Now, lending in domestic maybe 1-2%, but when the economy coming back, maybe lending growth could be 3 or 4 or 5%. And more importantly, when economy is coming back, eventually inflation is going back from currently 0 or minus to maybe 1.5% or 2% level within 2 years or so. In this case, long rate is inevitably going up. Currently, the 10 years bond is standing at 0.4, 0.5%. In my view, the end of this year, this long rate is going up to 0.8, and next year's maybe 1.5, the end of 2016, and maybe 2017 1.5% or so. On the other hand, the short rate will remain almost 0 until at least the end of next year. Therefore, lending margin should be widening quite dramatically because the lending rate is linked to the bond rate.
Yes, of course.
That's why banks can get a much higher profit for the coming few years or so. Overseas business, domestic volume growth, and lending margin dramatic expansion. And variation is extremely cheap. Where can we find this sort of interesting stock in Japan or in the world? That is my view.
Uda-san, thank you very much for joining us today.
Thank you.